Okay, what if I told you that you could build a genuinely profitable vacation rental in the Caribbean for under $200,000? I know it sounds a little bit like a fantasy, right? But today we're going to dig into the real world numbers from a case study in Secret Beach, Belize, to see if this is actually possible. So, the source material we're looking at makes this incredibly bold claim. You can build a 200K rental home that actually earns more than properties that cost double that amount. Now, that sounds way too good to be true, doesn't it? In real estate, that's just not how things usually work. So, let's really dig into the data and see if this claim holds up. So, the big question is, how on earth is that even possible? How can a property with such a lower price tag actually outperform its much more expensive neighbors? Well, the secret isn't just one thing. It's really a powerful combination of a very unique location, tourism that is absolutely booming, and a really clever building strategy. To really get our heads around this, you have to think of it like a puzzle. We're going to start with the biggest piece, the country itself. And then we're going to zoom in, piece by piece, until we see exactly how all these numbers click together to create a pretty surprising return on investment. You know, any great rental investment is always built on a solid foundation of strong tourism. But right now in the Caribbean, not all markets are created equal. In fact, there's one country that's kind of leaving everybody else in the dust. And that country is Belize. See, while a lot of its neighbors are still just trying to get back to their pre-pandemic visitor numbers, Belize is already surging way ahead. This is the first and honestly the most important piece of our entire investment puzzle. What's so wild about this chart is just how stark the comparison is. I mean, look at Belize, sitting at nearly 110% of its pre-pandemic levels. Meanwhile, you have major destinations like Bermuda and the Cayman Islands still struggling to even get back to 100%. So Belize isn't just recovering, it's in the middle of a full-blown tourism boom. This single number, 109.7%, it tells such a powerful story. You know, at almost 110% of its 2019 tourism levels, Belize is a market with really strong growing demand. And as an investor, that's absolutely crucial. You're not just buying into a recovery story, you're buying into a growth story. Okay, so we've established the why, this booming tourism market. Now, let's get to the where. We're zooming in on the absolute heart of Belize's tourism boom, the island of Ambergris Caye and its main town, San Pedro. This number right here, this is the number of guest visits to just San Pedro through October of last year. That's more than any other region in the entire country of Belize. This isn't some quiet, undiscovered town. This is a proven rental market with serious, measurable demand. And you know what high demand means, right? It means strong pricing power. The average nightly room rate on Ambergris Caye is $269. That's the highest in the country. And it tells us that visitors are absolutely willing to pay a premium to stay in this prime spot. But this next number, this might be the most important one of all. It's called RevPAR, or Revenue Per Available Room. It's a key metric that combines both the nightly rate and how often the rooms are actually booked. At $118, Ambergris Caye's RevPAR is nearly double its closest competitor. That means properties here aren't just expensive, they are also consistently full. And this chart here shows us exactly when that demand hits. You can just see that huge peak in the high season, from January to March, when rental income just soars. But you know, there's also a really solid shoulder season, and that creates a predictable pattern that you can actually build a financial model around. So we've got the perfect location. But how in the world do you get into this hot market for under $200,000? Well, the answer is in a unique construction method, high-quality prefab homes. This slide really just puts the cost advantage into plain sight. I mean, look at the price of a two-bedroom property in other popular Caribbean spots. We're talking multiples of what it costs at Secret Beach. This incredibly low barrier to entry is what makes this entire investment even possible. So, how does this whole prefab process actually work? Well, the homes are built by skilled craftspeople in a factory, which means way better quality control and zero weather delays. Then, the finished modules are shipped directly to your property and assembled in just a matter of weeks. That speed is a massive advantage. You can start earning rental income months or even a year sooner than with a traditional build. Now, the properties at Secret Beach are off-grid, which I know it might sound like a negative, but it's actually a huge financial plus. With solar power and rainwater collection, you literally have zero monthly utility bills. This dramatically lowers your operating costs, and it also gives you a powerful marketing angle for all those eco-conscious travelers out there. All right, we've covered the where and the what. Now for the part everyone's been waiting for, the how much. Let's break down the potential earnings based on all this market data. Okay, this chart translates those visitor numbers we saw earlier into real-world occupancy rates. You can see the high season gets close to 80%, but the key number for our financial model is that blended annual average for a well-managed property, 56%.
Now, let's combine that occupancy rate with a potential nightly rate. This is where we find what they call the sweet spot, a $250 nightly rate, which is actually below the island average, by the way. At 56% occupancy, generates over $50,000 in gross annual revenue.
And you're not just a passive investor here. I mean, look at the jump in revenue just by adding a pool. That one single upgrade can add over $10,000 a year in gross income. It's a crystal clear example of how strategic improvements can pay for themselves in no time flat. And here it is, the bottom line. At that sweet spot, a $199,000 investment generating $54,500 a year, you're looking at a 27.4% gross yield. Now, to put that into perspective, a typical vacation rental in a major U.S. city might get you, 8 to 12%? The difference is just staggering. Okay, let's pull all of these pieces together and just quickly recap the core numbers that make this investment so compelling. So let's just run through the key metrics one more time. An investment under $200,000, nightly rates of $250, a strong 56% average occupancy, over 128,000 visitors to the island, a national tourism market at 110% of pre-pandemic levels, and lower operating costs because you're off-grid. Each number just builds on the last, creating a really powerful case. Which, of course, brings us all the way back to our initial question. When you combine that low cost of entry with the strong, data-backed revenue potential, you just have to ask, could this be the smartest way to get into the Caribbean real estate market right now? The numbers, they certainly make a compelling argument.